Good evening, everybody. Good afternoon. If you're just joining us, I am just sharing this page and we are going to get started here. QQQ fall tomorrow. I did mention something about a potential fall, but again, nothing is screaming downside yet. All right. Alrighty, we're good to go. All right, so first things first, as we always do, we're going to take a look at the economic calendar. We talked about this last week in that video I posted on YouTube. You guys can go check that out if you want to see Friday's recap. Monday, and again, I do directly correlate what I see from the economic calendar, right? Basically into, let me turn this down a little bit, put it over to the left. There we go, we're good to go. But yeah, I always correlate what I see on the economic calendar with what I see on the chart. And this is where I'm going to kind of, well, hand in hand show you guys how I do that or how I think about that, right? So Monday, we don't have anything. We have FOMC members speaking. And where are we, right? As far as the weekly is concerned, we are still well underneath the control of sellers. So if we are not above that, right, even with low volume or a lack of a catalyst, it could, you don't want to be up where sellers control the price with no volume, right? It's like being stuck in the desert with no water. You don't want to start that trek. So I think what would be really important is that over the weekend or between now and tomorrow, the Qs break or gap up. If that happens, if you are above my cost basis of 498.20, I could see that continuation. And again, we don't get decent economic data until Thursday and Fridays, right? We got BRICS Tuesday and Wednesday. That's light data. Existing home sales. There's something, but not, it's at the bottom of the tank. So this is the parameters, right? And this is, I'm going to show you, I'm going to teach you guys again right now. If you guys don't mind tapping your screen, I'm going to teach you guys right now on how I just avoid losing money. All right. Right here. I'm going to go to my highs. I know that my highs are what? The trigger to continuation to the upside. I know this, right? So I go ahead and I draw a box highlighting that top and the bottom where I can see price was held, bounced off of in, we get 1 and 2 touches right there at 490.10. So that's the parameters of where we are currently trading within. Now, there's got to be a trigger to the downside, and that's where this comes in. So we are yet to have fallen under 488.20, right? Which would be the first part of going down. Under this wall where we bounced, right there, right? We will move down into 483.72, which that would be the catalyst for me to go short, right? So I can put a little line down there, knowing I would be targeting a breakdown underneath that level. Obviously, I can always use 488 as a stop loss, right? But all in all, we are sitting in between the trigger up and the trigger down. And if we see that a potential range, so no volume, right? We don't have any big data, so it's got to be something else, right? Hopefully not war related or anything else, right? But we need to see 498. So I just don't. So the point I'm making here is I don't trade in these ranges. I'm not excited to trade in these ranges. And after we pulled back and touched this box and pulled ourselves back up, that's exactly what I warned, right? Benji, I've seen you here before, no? There's probably a ton of people named Benji out there, though. So anyway, that's what I see. Potter with options, they lose value so quickly if they move against you. How to stop loss? Well, that depends. If you have something longer, right? If you have weeklies that expire today or maybe in 2 days, one big move against you can absolutely crush you, right? And that's one of the most dangerous parts of trading those options. So what I highlight in my strategy is when I find those options, I want to be able to compound with low risk. So sometimes, and I'll be honest with you, dude, like with LW, I already paid for the trade. That one I'm just gonna let it go, right? The risk is so low that even if I was to lose the entire thing, it would be not even really a drop in the bucket. But with longer expirations, typically if I am above, right? So we're going to go ahead and look at these two candle closes, right here and right here. Above 497, if it's on the lower time frame, I want to go ahead and utilize that 478.15 as the stop loss. That is a mechanical level. Okay. Do I use quantitative data? Yes, I do use quantitative data. It's not it's not the center of my strategy. But anyway, yeah, it's something I do utilize from time to time. So again, right, do we have the setup to potentially stay in this range that we've highlighted here on the Qs with nothing coming forward? Yes. Am I going to decide that's how my week is going to go because I just formulated that? No. If we're open above 470 or 497, up. If we are moving down below 489 and breaking into 487.65, short. That's pretty cool. No one ever knows what I'm talking about. It's good stuff, dude. All right, so I feel like we got a good idea, right? This is the week ahead of us. We are creating the tension that we need to make the bigger move with this sideways action, right? Sideways action, expansion, contraction, contraction, expansion, right? So we expect that same phenomenon to happen here. All right. Now, the last thing that I would typically like to go over is earnings. Try to get out of here before we get triggered. Oh, look at the BRICS. Look at the people that are going to be at BRICS. See, look, I got triggered. Armenia, Belarus, Turkey, India, Brazil, South Africa, Iran. Sheesh. That's crazy. Anyway, where's my search bar? There we go. All right, so here's a look at the earnings that we have going into this week. Again, I did cover this. I'm not going to go into it really in depth. We are going to chart some of the ones that are a little bit. So if you guys want to take your pens and pencils out, these are just ones that I'm going to go ahead and chart. They may not look good, but I've played them before. I know that they historically can do well or do well. I'm looking at new on Monday afternoon. We've got 3M. So MMM, that's also one I would like to take a look at. I've got, I'm not really big on Verizon or General Motors but GE could be interesting. So we'll take some time to chart those really quickly. LMT, I guess, you know, war and all that other shit. Interphase might be one to look at. That one moves a little crazy on earnings, and other than that, maybe Baker Hughes, but we'll take a look at the ones that I just wrote down. So, all right, am I recording this? I swear to God, I better be. Yeah, I am. Just making sure. Yeah, I am. Yeah, BRICS is developing their own, trying to. All right. Juicy earnings week. Yeah, we do have some pretty decent earnings. We'll take a look at more of them as we move through the week. All right, so we've got our economic data ahead of us. We've got our earnings set up. We'll take a look at Coke. Now, would you guys like to take requests now, or just go ahead and chart these earnings up? I'll let it be up to you guys. We can just go ahead and knock out all the earnings for Monday and Tuesday that I've highlighted, or we can go ahead and just take your requests. Request. Earnings, send it. Earnings. Oh, earnings is winning. Earnings is winning. Yeah, I don't know. Earnings. I promise I'm going to take your guys' request. All right, earnings is the one. Okay. All right, so we're really quickly going to go, and it shouldn't take, listen, it's either a good setup or it's not. It doesn't take a fucking rocket scientist to identify this, right? So let's go ahead and go to the weekly. I'm already seeing some intriguing things here on new, so we're going to just get rid of everything, all right? So already we can see some trend, right? I can see it. I'm sure that those of you guys inside of my Discord can also see it, right? Pretty nice. It's pretty rare that you get something that clean on the weekly. Now let's highlight what is sideways. Where are we coming from? These are simple things that we can do to identify where price has been and how important that is, obviously. Okay, so what is intriguing about this chart? It's at cost basis. What makes for a good earnings setup? Stocks talk. No shot. That's crazy. I'll shoot you a follow, dude. I haven't seen you in a minute. Actually, I saw your video come up the other day. I was like, no way. Dude, you gotta, if you have a chance, bro, go peep the videos, dude. We've been on some other shit. I think I broke the market. Anyway, so we are sitting up against cost basis, right? 158.50. That trigger gives us access to what? Right now, I see some wicks at the top of this box, clearly coming off of that 165.75. So with volume, right, and we're going to go expand this box both to the highs, and that setup is replicated here. I actually really do like this. So the reason that I like it is because it left behind that. Looks good, doesn't it? So what are our catalysts that it has to move through outside of this? So we are at cost basis, so pushing into earnings and expanding the volume that is within the box and moving you, I think, 1 to 172. If this is a phenomenal earnings, it might be one where we go ahead, and because I'm going to go ahead and look left a little bit, I will mark this at 182, but these would be my targets, 172 and 182. So I'm going to put a check mark by new. Obviously, there's nothing we can do about that right now. All we can do is go ahead and... I like it, though. I do like it. I like the channel potential. And this should be in confluence with one of my targets. Watch this. Perfect. So you're right around that cost basis mark, right around 170. Can I phone a friend? That's funny. Right? So we are at the... Again, if you are new here and you have no idea what the hell I'm talking about, in any area of consolidation, the volume is concentrated at the 50% mark. If a candle closes above that, having moved outside of it, i.e. we lost the floor, we came back up to reclaim it, we failed, we came back up to reclaim it, we did. Now we're moving to the 50% mark. If that is broken, we shall make a, my strategy says that you will make a new high outside of that area of consolidation. All right. So, with that being said, and if you add volume to the mix or catalyst, it can be pretty big. So I like it. I actually really do like it. And this is actually similar to the setup that we made that 1500% trade on with MU. And those of you guys who are new here, just to flash, just to give you a little sneak peek here. These are the type, I mean, this is actually a little bit to the extreme, right? But we do make insane percentages here on almost every single trade that we take. 5,450% on the LW trade that we took. 100, I didn't even take MSTR. This guy got 35,000%. These people, 2,146%, 1,400%. Obviously, he posted his simulated returns, which was 2,700%. Pretty insane. Pretty insane, the type of percentages. And we do that by holding our trades through what I am identifying or what you're going to hear me say or define as empty space, right? But consistent. We don't 40%, 50%, not even a factor for us. Look at the 326%. Anyway, pretty good shit. Pretty proud of what I have created and how it's helped people. It's not about And really for me, right, creating independent traders is a bad business model. You don't have subscription-based people. They make their money, they realize they can do it on their own, and they vamonos. All right, so moving on. You said new doesn't look like a big earnings mover. I see a decent move on earnings here. I see a decent moving on here. So I think we get 168.50. If I'm to go ahead and lay down a target, I think 168.50 is a good target. It's not a crazy earnings setup, right? But it does show or flash some potential. If the risk, so how would I end up taking this trade if the contracts are sitting around, let's say, $4 to $5? What is it for me to not, or to just throw in $200, right? We did the same thing with LW, with everything, right? This is the same thing we do on everything. What we really want to focus on is, we want to compound target-based option contracts. We are operating in a strategy that you can go watch my videos. It doesn't matter if it's earnings. It doesn't matter what it is. We hit our targets. And we hold to our targets, and that's something that universally in our group we try to help each other with. Is a lot of people struggle holding to their targets and seeing these big gains, but we try to show you that that's possible. All right, so new MMM. I can't answer that right now, bro. Weekly. All right, so the weekly time frame. Let's again explore where we've been. What did we break through? What's underneath us? So we are slowing down, and it seems like just this wick right here, right? Which is, we're gonna go ahead and highlight this box. So again, if there is a target directly up above you, it would be 144. Now I'm gonna let you know immediately, at least here, and we'll go ahead and pull this back. Hold on. Let's take a look at the monthly first, right? If it's a bigger setup, ooh, there it is. So higher the time frame, higher the potential return. Beautiful, absolutely gorgeous. Love the confluential taps right there. And we're gonna go ahead and mark this top. If that doesn't, so if you guys don't know what this is called what I would define as a confluence, right? And there's many different confluences in life and data and stuff like that. But what I use is obviously a confluence and a key level and a channel, right? I don't use any indicators. By the way, guys, all of these gains that you see are done with no indicators. Yeah, Dustbuster right there. If you guys have any questions, don't ask me if the workshop or my strategy is any good. Ask the people who use it. But anyway, I could see that on the monthly of 173, but that is probably not something that we would see happen on earnings. In fact, as far as I can recall, earnings does pretty well, but not an explosion of price that would send it up higher. So it doesn't really make a list of stocks, I think, that are my favorite going into earnings, right? You've already tapped pretty much around that floor, and you just really have something underneath you. This is honestly a setup for major consolidation, right? You're stuck in between the triggers up and down, so you could quite literally see that sideways action occur here. I would say, if anything, there's even empty space to the bottom, but yeah. All right, so not bad. We'll take that. Not the best though. Nope, at all-time highs. So we're gonna go ahead and Ixnay on the maybe a 175 retest. Anytime I see something like empty space left behind and you're going into earnings and you're just kind of sitting up at those highs, again, is it worth the risk? You'd have to go look at the contracts, but a punch down below N87, I suspect you will go to 174.83. All right, LMT, we'll look at that one really quickly. I'm trying to move on so I can take your guys' request. You are up against the highs, directly up against the highs. We have nothing over to our left, so this is, again, another all-time high stock. Either you just keep pushing, because when you're at all-time highs, it's typically pretty hard for sellers to step up, or this is true. You are directly up against resistance, so if you got major newts, maybe you can grab something highlighting the structure underneath you at 571. So not the best. All right, ENPH, and then we're done, guys. If you guys go ahead and start dropping your request. Holy hell. Okay, so where have you been? You bounced off of this structure underneath you, but that's really not much of structure. Structure is here. You just have a very, very small box, and we're going to go ahead and highlight that as well. No analysis left behind. So, what do we have underneath us? To that floor, empty space, right? You just bounced. So I would suspect, looking at this as of right now, there's two possibilities I have here for you. One, whenever you see this empty space underneath you, a lot of the times what I'll do is I'll split it in half. That is typically where you'll find a imbalance bounce, right? And that's going to be at 88 flat. The possibility I see here for ENPH, which would kind of be a trick play, oops, off the wrong one. You know what? I don't then. I'm not going to force it. So I don't see it. But what I was thinking, and maybe I could be right, is that you bounce off of that 50% mark, and there's some channel here, right? That'll kind of curl you back up and help you fill this empty space up to 158. But it's not something I think I would want to take immediately. Maybe. I might actually look at that one. If it is at $88 or it bounces off of 88, I'll write this down. Off of $88, if it bounces and the contracts are $5 to $8, I'll slap a trade into that. All right, that's it. That's it. So for earnings, not great. I liked new. It was all right, right? Doesn't seem to be the best or craziest mover on earnings. So I'm not going to force anything into any earnings setup that does not fit my script. All right, if you guys have, what's up, Marcel? If you guys have requests, I'd be happy to take those now. I'm going to focus on 24-hour candle closes, and I'm going to let you know which direction I think it's going. And if I don't think it's going in any direction, I'll tell you that. I might start with the weekly on some of these, though. All right, so the first one I see was Airy, and let me write these down. All right, Airy. Why do I gotta write like a 5-year-old? Now, incredibly, listen, because I know small accounts can fuck with this. It is actually a really interesting trade setup, right? The risk reward should be there. Where are you? The floor. What are you doing? Consolidating, right? Simple on the weekly or the higher time frames. We don't want to overcomplicate analysis. We want to simplify it. So what are some simple things that we can find, right? We're in consolidation. We have empty space up above us, all the way to 970, right? Again, major move coming off of this floor. So for now, and only for now, my analysis would be that you're going to, or you're in the box. So again, when you're in consolidation, there's no telling. But I would say simply above 750, candle open, or if we move down here to the 24-hour, that is still true, right? So drop a line, wick, body, 745, and we're looking for, yes, on the 24-hour time frame, 850. But actually, this trade gets a little bit more interesting. Now that I've moved down to the 24-hour, I can see some interesting aspects of the structure ahead of us. Every little bit, and this is something those of you guys who are newer, we highlight, and I'll show you really quickly, empty space, right? We look for trades that have empty space. Another over 1,000, this was a 2,000% trade at the top. Empty space. So I'm going to show you guys what I look for, right? I have a box, really simple, boxes and empty space. I'm like a moving company. I look for a candle close outside of the range, right? And if it looks like this, that is empty space. And that is where I make insane amounts of money. That is where the percentages of my trade, hell yeah, brother, free Palestine in this one. That is where I make the most money. That's where I make the most money. So every trade that you find us in, we took Nike to the 50% mark between here and here. It surpassed it and built on top of it. But as you can see, any giant, massive area of empty space typically is going to take 2 turns and in here you end up popping up, losing steam, retesting through the empty space underneath you, and then going up and finally filling the empty space. And look where it ends. The first green candle to your left. Structure. This is what stops stocks, right? This is what lets stocks run. New channel? Yeah, this is me. I have dreams of empty space at this point. They're not called fair value gaps. The way you guys interpret fair value gaps is way different than the way I trade. Absolutely not. Absolutely not. You could go ahead and spend the next 2 years trying to fucking make your way through ICT and trading on the 14-minute time frame, and then trying to get through a funded account. Y'all really, not you, but anybody doing that kind of stuff, man, I honestly feel bad for them. I feel sorry. Yeah, ICT is a fraud. I'm sorry. You can't be bragging about your shit and then go blow your account in the Robbins Cup over and over again. It's all so stupid. I'm not going to go into it. All right. Anyway, yeah. All right. Go ahead and keep dropping this request. I'm going to really quickly just finish what I was saying here. So anyway, on Airy, that same setup appears, I say 10:30, right? But you will have to break through this box. All right, the next one I see, SMCI. You've been here asking since the beginning, so we'll go ahead and take care of that one. Now, listen, I talked about this one, and I was patient, and I'm going to continue to be patient. Like I said on LW, I make, or anything. If I wait and I make sure it's perfect, I typically get my bag. Excuse me. All right, so on the 24-hour, again, if I go to the weekly, you are just quite literally, and this is unfortunate, but you did refuse the weekly floor. Look at that. First green candle to your left. Oh, yeah. That's what you got to reclaim. That's what you need to see open and be green. You're going to move off of that, right? But as of right now, you rejected it, and we are going to look a little deeper. Attention to detail, right? We can also see candles holding a close at $46. What do we see there? A wick on the weekly. So $45.88 being that trigger potentially back down, right? Which it kind of is looking that way. And then obviously above $50.87. So it's a sit and wait. What does it mean that SMCI is a good value right now? Did I say that? Hello, Mr. Fresh. It's me, Silver. What's up, dude? I'm just fine, Senorita Palladium. Oh boy. All right. Anyway, so moving now to the 24-hour, right? Now we can kind of see that phenomenon at work. Now I'm going to highlight. So every single time frame is going to receive. We're going to do top-down analysis. I'm not really liking the 24-hour as much, so I'm going to go ahead and move it over here to the 4, where I can see my structure a little better. And with that, right, I can now highlight that, yes, there is empty space down here and a floor of $45. So I'm not going to say up or down. That is something I'm not going to do. I'm not going to say up or down while you're literally going up and down in a fucking box. It's a wait. Wait under 44.84 if you think it's going to go back down to that floor of 38.50, where I think, I don't think, fuck that. I know that if you punch down below this, you will be making a new low on SMCI, where you would need to go back out to the weekly and highlight what you left behind and what needs to be bounced off of them. 35.45, and if that is surpassed, all the way down to 31. Okay, very easy. Aren't they in a lawsuit? I don't care. I don't look at the news. I don't do nothing, dude. Do you think these rich people manage off of their massive investments? I don't do none of that, brother. If that, you know, there are obviously instances where in intraday trading, if I know that a company is fraudulent and it's going through court proceedings or anything like that, I know the volume is probably going to be dry. But when I look at SMCI on the weekly, it actually is one that I okay, so let me paint this picture. You keep pumping out articles and you say, this thing's short, it's fraudulent, everything's wrong, right? Cool. This drives the pressure of short volume up. If you don't move when pressure is down, you have to get out. Margin calls, there's a timeline, right? So eventually that pressure, sellers have a fucking job to do. If they don't do their job, right, they're left with basically being, their backs are up against the wall right here at 50.81. That is where buyers will reclaim the price. We've already talked about this on the 4 hour as well, right? This one little itty bitty wick. And it's empty. And here's my thoughts, right? Not my thoughts. This is just how I'm going to play it. If we are open outside of 50.75, I'm playing this all the way to 60. And you know what? If I see, typically, and I have taught people in my Discord that this is true, the setups become before the news. They set the stock up to rip. They know. We know that they know because we just saw an article last year, right? Everybody was talking about it, that there is another something past the Bloomberg terminal where you essentially can get a hold of news months in advance. All right. So anyway, I am a tech. So this is a strategy that I created called the Potterbox strategy, right? I am looking at the main concept behind this strategy is, one, nobody is seeing the same market that I'm seeing. And that's not, I'm not saying that in an ego way. I'm literally saying technically there is a different market. This is something that has bewildered me since I started, and now, and when I finally decided to stop letting other people decide how I look at the market, everything changed. Tell me why, those of you guys who are new, why do we use the daily time frame rather than the 24-hour time frame when everybody has always said, smart money comes in after hours, smart money buys before the, right? We get this whole thing. This whole this is a part of the market, but don't look at it. I want you guys to take a look at this because this is the only reason that my strategy in itself exists. I can't see that at all. Just my cards are on the dresser. You can just grab that. Right. So most of the trading is done after hours, right? Okay, let me show you something. And this is, again, something not a lot of people know, they don't use. I'm going to take away that extended hours trading and show you the difference real quick. See how structurally sound this is? I go over here, struck off the top of the red candle and the bottom of the green candles, cost basis bounces, right? 50% of the box. Now let me take it away. Do you see the difference? Oh my fucking God. No. Come on. Damn it. Ah. Fuck. One second, those of you guys on YouTube. You know, it's a good time to make sure my audio is working. Okay, it is. All right, we're coming back. Whew. All right. All right, we're back. Everybody with me? All right. Thumbs up in the chat. Sorry. Thumbs up in the chat. Thumbs up in the chat. Can you hear me? Can you hear me? Thumbs up. Thumbs up. All right. Can't see? Scroll away and scroll back. If you can't see, scroll away and scroll back. Nah, that didn't get me. All right. My phone died. My phone died. All right. So really quickly, again, thumbs up again, something. Do you guys see this box? Do you see how structurally sound it is? Right? So this is the 24-hour time frame with extended hours data. All right? Right? So take a look at what that looks like when I take the data away. Do you see where's the structure? Why is it all gone? We are looking, yeah, I'm still recording. We are looking at an incomplete amount of data. What the hell does, sure, all it is highlighting is what happened during live trading hours. But what does that do for us? All of the orders that are put in aftermarket and before the bell are important and massive. And they move markets. And so this is the highlight. This is the only reason that I have seen and we have seen, right, consistent, big ass moves. These type of percentages that, you know, again, it'd be like, oh, okay, well, he showed a couple. Look, Soundhound, I didn't trade that one. This dude did it by himself, 425%. 181% on Apple. Don't even trade that one ever. SPY, hardly trade that one myself. He did that all on his own, right? ANF, I did call that one, but that one was 800%. Not for, well, there's a bunch of different percentages, 600%, 384%. This dude traded, well, I called this one, but short, right? We took this one intraday and made 1,500% because we know where to take, we know where to get in. We know the market is mechanical and we adhere by the time frames that I'm speaking on. Right? We don't stray away from that because we know that that is the true structure with the market. But Schwab, 261%. AAP, 195%. Right? And the best thing about my strategy is that it does highlight low risk, high reward. So you could lose more than you win and still win. So anyway, do you look at gaps or pre-market change? No. I mean, yeah, I look at everything pre-market. So. I'm a little confused. I don't have that many people in. I don't know how you take an entry on the 24-hour time frame. I love that you asked that question. The reason that we take things on the 24-hour time, or the best way for us to take a 24-hour time frame trade is by taking it at the end of the day, right towards when we know that data is going to slow down. And if it's outside of one of its current, like for Mara, right, being outside of 1894, that would clear up the move all the way up to 1885. The daily is just showing you data from 9:30 to 4 o'clock. But that is not important. Whoever said that it was important? I don't know. Nobody has been able to explain this to me. And this is where I've realized there are so many ways to interpret the market that I don't have to listen to anybody else unless I see that there's something statistically behind that, and I don't have to force it. I can see it happen, replicate it. All right. If you guys have anything more requests, I'm going to go ahead and just a little quick there, learning moment. I did ARI and SMCI. So what do we have next? I see Celsius. I still think this one has a lot of potential. This one also is a highlight with empty space. It has, I typically do not trade the open. In fact, actually, here's what I do at the open. I sell my contracts to people. My contracts that I buy for $10 to $15, we sell them for $100, $200, $300, $500 to people who are day trading at the bell. They're the people who increase the price of our contracts and give us enough cushion to get out. I mean, yeah, we see the moves before they happen. And I'm not saying that I'm trying to show you guys that you can see it too. So does everybody else in the Discord. So we have a collective going. All right, so I pointed this out, and you know, there is a potential for range for sure. You've got a potential box that looks a little bit like this, right? We need to be above 35.50, and right now we're sitting at the 50% mark. Now, sellers have a job to do. I just mentioned that, right? They drive price down, they drive price down, they drive price down, they drive price down, and they still haven't made a new low. So it is do or die time. Sellers have to, and if you look at here on the lower time frame, you'll notice it dumped down really fast. This is why I teach people, if you are long on something and it's dumping fast, that's giving you a chance to re-enter. That empty space will likely get filled up. So we dump fast, we hit the floor, we fill the empty space. Now we are up against the catalyst to potentially get out of here, or we left empty space down below as well, and we literally just hit the 34.42 and we curl right back down. Now, another aspect of my strategy is that I highlight the 1, 2, 3, 1, 2, 3. So a exhausted floor would collapse on 4. I didn't mean for that to rhyme, but you have a little bit of empty space right there. So I would say easy $29 target. So why use the 4 hour or the 1 hour? So I do top-down analysis, right? I come to a conclusion of this is a good setup because it has empty space. Now, that everything I'm teaching you here in the 24 hour is true on every hour, on every minute. This strategy is fractalized where you can look, oh, God damn it.